Everybody, this is Jim at SB500chart.com. It's about 4:40 on June 20th, 2013. Very close to being the longest day of the year. I believe that's going to be tomorrow, the summer solstice. But anyway, why did I even mention that? It popped up into my head. We're going to take a look at the chart, but first I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on a chart. And guys, I'm going to eat some crow today, but hey, maybe it won't be as bad as I think. Okay, in yesterday's video, I mentioned that I thought we would get a likely bounce here at about 1620 on this lower green line. And the reason I say that is because usually you have three touches on a decent trend line, but gosh, not to be. Matter of fact, the market really just pretty much just kind of gapped on down underneath that line from the get-go. And part of the reason why I thought we would bounce there, not that it helps that much to explain flawed logic, but I will, is that I thought this 1598 line here would hold. I really thought this would give more support than what we saw out of it today. It looked like it might. It really did. Twice, looking at a 3-minute chart, you see we came down, bounced up, came down, started to bounce up, but then broke down underneath it and did so by a pretty decent margin. The low of the day, come on, about 1584. That's about 14 points underneath that line. So yeah, I think we're safe to call it pretty much busted. But I'm going to show you something that's kind of interesting. And this may be where we get a little bit of a bounce. By the way, with this move underneath the green line, we now have a target of approximately 1572. And I think it's safe to call that target and to expect it to get hit. What's interesting is, you remember we were in this little descending channel for about 4 days, 4.5 days. If we take that top line and kind of extend it down, that's about where the S&P ended the day. I don't know whether it's safe to say that the brakes were put on the selling there, but at least that's where we ended the day, and it wouldn't surprise me if we get a little bounce and then come back down and fulfill that target, like I said, about 1572. Looking at a 2-minute chart, I'll be honest with you, there's not a whole bunch of sense you can make out of this on a 2-minute chart, because it's all come apart so swiftly. I mean, you think about it. Within the course of a day and a third, the S&P has lost from its high to its low 84.50, has lost about 66 points. Which is approximately 4%. And it's done that in less than a day and a half. So the reason I say, what sense can we make out of a 2-minute chart? The reason I say that is we don't have enough up and down for us to be able to reliably say, well, here's a trend line. Well, maybe that is a trend line, but there's not quite enough for us to go on. Okay? So at this point, I'm just going to leave this alone, and we'll stick with the minimum target area down here about 1572. And again, oftentimes these targets are reached on a back test. So what I'm saying is it could be that we establish some type of trend, break out of it, and then come back down kind of hard on a back test to make that 1572 target to make that come about. So guys, wow, what an ugly day. I apologize. I did not think this line was going to break like that. I really didn't. But now that it has, I think we got to stick with what the pattern states. And the pattern states, and I'm talking about the pattern that is defined by this line up here and this line right here. It's defined by these two green lines. And now that that's broken down, we know to look for a move that is a minimum target from the height of this pattern. You measure the height, put it down to where it broke down, and that's where we're coming up with that 1572. I guess the good news is if you look at this area up here in the mid 16, low 1650s, I guess the good news you could say is, well, shoot, we're 80% there already. So let's see if we get a bounce and then a move back down tomorrow, in which case this line would be producing a little bounce, or let's see if this line just flat gives way and we come on down and get this whole thing over with. So that's about it. I'm going to keep this kind of short because there's been some issues on YouTube with upload times, so I'm going to keep it short and sweet. Just one more thing I want to add. Looking at a daily chart, you can see that this line is obviously badly broken. Okay? But we've got some fairly, as far as long-term support, we're really not even close to long-term support. That would be coming into play right now in the low 1500s, or conceivably even in the mid 1400s before we start to say this market is in serious deep water. So right now, all of this could be happening, and it could be nothing more than the typical summer doldrums that we've seen. And by the way, if this does turn out to be the case, then we should be on the lookout for a bottoming pattern. And one more thing I want to share with you. You remember we were talking about sell in May and go away? Well, I don't want to lend undue credence, but so far our top was put in May. So for what it's worth, I would say a good thing would probably be to have some dry powder handy. And look, guys, thanks for watching and thanks for your support.